Welcome to Gen Z Money, episode 38.
And the thing too is like, so what if I did have it easier than you? Like, why does that justify you not wanting to try for yourself? Even if you have to work 10 times harder than me? Like, it's just a matter of like, do you want to succeed? And will you do it regardless of what anybody else has to do?
Even if my jokes aren't funny, my tongue tied up on it, and I don't need to speak a single word, 'cause you got me holding.
What's going on, guys? Welcome back to the Gen Z Money podcast, where we turn financial peace to your reality. I'm your host, James Bowman, and today's guest, we bring on Brandon from Rinky Do Finance. And Brandon shares his story about learning how to invest, learning how to save money, learning how to live below his means, and trying to influence and teach others how to do the same. We go into tons of different things like investing in mutual funds, index funds, even crypto we talk about. And it's just great. I love to see Black people succeeding and starting to build generational wealth. Brandon's not from the United States. He lives in Canada. So it is a bit different for them, but the principles of it are still the same. So I really hope you guys enjoy. Shout out to my Canadian listeners. Hopefully you guys get some gems from this. And of course, I know people from the States are also going to get some gems from this, but I don't really have much to discuss because he does such a great job. So let's just jump right into the interview. What's going on, Brandon? Welcome to the Gen Z Money podcast, man. How you doing today?
I'm doing fantastic. Thank you very much for having me.
It is Mr. Rinky Do Finance himself, man. It's an honor to have you on to share your money perspective up to this point and get your story, man.
Thank you. I always love chatting with people about my perspective on money, having a bit of back and forth about hearing what you think. So it'll be a good time.
Absolutely. So let's just dive right into it. I don't want to waste any time. So let's go back to the little Brandon. Let's go 10-year-old Brandon, maybe fifth grade. How was money talked about and viewed in your household as you grew up?
So it was interesting. Like, it wasn't, I don't remember very many conversations explicitly about it. It was, my parents always encouraged me to save money and be smart about it. But it was more just kind of a background thing that went on.
Gotcha. So when you say it wasn't talked about, does that mean it wasn't talked about positively or negatively? Like they just didn't have the conversation with you at all ever? Or
Right.
how?
It was pretty much just, if they noticed me spending too much money on junk food or something, they'd just be like, hey, it's always good to save money, that sort of thing.
Gotcha. Okay. So as you got older, let's skip a little bit forward to like the 18-year-old time frame when you finally started, like you came into the real world and you're like, okay, I can make some decisions now. What did that look like? Were you in college or how'd that look?
Yeah, so that was an interesting time because that was right around the time I started actually making money, like significant money for myself in terms of just consistent money coming in through I started out working at a warehouse, and then also was freelancing on the side. Freelance writing turned into my full-time job for a few years. That was interesting because I kind of figured out a lot of things the hard way in terms of how to manage money properly. There was early on, I was just kind of spending on a lot of little things here and there, not really thinking about saving, just more like after I finished spending, if I got a little bit left over, I'll put it into a savings account, that sort of thing. So it took a few years and a lot of books to really kind of figure out and find my footing financially.
So was there ever a moment where you because a lot of times people have like a sick and tired of being sick and tired moment, or like a jolt of fear that comes over them. Was there something that happened to you to cause that, or was it kind of like one day you just woke up, you're like, I want to save a little bit more money, let me figure out how to do this?
Right. I always had this kind of background kind of anxiety where I was like, am I saving enough? Like just trying to figure out, like, am I on the right track or am I not? The real moment that kind of flipped everything for me was when I read a book called "I Will Teach You to Be Rich" by Ramit Sethi, where I kind of, like, at that point I was like, I started to have a concept of budgeting and things like that. Um, that was the moment. It wasn't so much a negative experience or anything. It was really just reading a book that kind of brought everything to my attention and made me kind of see myself as someone who could manage money wisely.
Yeah, I think that's awesome to where, because I think a lot of the world's problems would be solved if people could just look at the negative experiences of other people, learn from them, and implement them in their life. But unfortunately, even me, sometimes I get to the point where I have to go through it myself. I have to get bitten by the snake before I'm like, okay,
Right.
you know what? It's time to get busy. And of course, guys, I Will Teach You to Be Rich. I'll have that in the show notes below where you guys can find it. So, well, let me ask you this. Why did you think you needed to well, I'll preface this question by saying not many people think that they need financial education. Everybody thinks
Right.
that, they're just fine. So why did you feel like you needed financial education? Like what drew you to look at finance books?
Yeah, I was I was very conscious of the fact, especially around, like, in my early 20s, I knew I was making very good money for my age, and I felt like I wasn't capitalizing on it properly. I felt like a lot of money was kind of slipping through the cracks, and so I started at the around the time, it wasn't just personal finance, but I was reading a lot of self-help books in general, just trying to improve overall, and personal finance just was a natural area for me to look at.
Gotcha. So you mentioned I Will Teach You to Be Rich. Was there any other book that kind of sparked that light bulb moment? Like, wait a minute, hold on now. I could do a little something, something with this.
Yeah, Total Money Makeover by Dave Ramsey as well. Both very classic books. Kind of, they're two very different authors. Like, they disagree on a lot of things, but I think fundamentally, um, the message that you can take control of your finances and improve over time is the constant between the two of
All right. Well, Brandon, let me ask you this. If there's a listener right now listening to this and they're like, I have enough money to buy one of these books,
them.
which would it be and why would you pick it?
That's a really good question. You really can't go wrong with either one of them, I think, especially if it's your first, your entry point into personal finance. I think I Will Teach You to Be Rich is a little bit more um it's very accessible because, for those who don't know, like, Ramit Sethi's whole thing is, you can be smart about money without sacrificing happiness. It's really all about figuring out, what actually makes you happy as opposed to what you think makes you happy to spend money on. And then, finding a way to spend more money on that thing while cutting back everywhere else. I think it's, if you're completely new to personal finance and you're in this weird place where you're like, it does budgeting mean that I'm going to have to be miserable and I'm going to have to be, not having fun? I Will Teach You to Be Rich is a really good book. But again, you can't go wrong with either one of them, I don't think.
Yeah, I think that you made a very good point to where they're I'm not going to say they're complete polar opposites, but I Will Teach You to Be Rich is more of an inspirational self-help book, while Total Money Makeover, a part of Dave Ramsey's network, which I love Dave Ramsey, I don't have a problem with him, but it's also it's driven by fear. It's to
Right.
let people know, like, listen, if you're living paycheck to paycheck, you are in danger, which
Yes.
in some circumstance, he's absolutely right. One bad medical mishap and it could truly ruin your family.
Right.
So they are polar opposites. And unfortunately, I think fear um inspires people a little bit more, or inspires
Yes.
people to get moving a little bit more than inspiration does. But I still think that they're both
Yeah. I
phenomenal.
mean, if you look at the numbers, I'm sure Dave Ramsey, number one, he's been around a lot longer than Ramit Sethi, but I think also because of the fear-based messaging, he has probably helped a lot more people. Just because that there are a lot of people who need that. There are a lot of people who simply won't change if you take, like, a sympathetic approach. You really have to, like, strike fear into them. Something like, you will be poor if you don't figure this out.
Yeah, like strike. You got to strike fear in them. No, but it's effective. I will say
Right.
that. And a lot of people might say, "Oh, Dave Ramsey's terrible. He doesn't know anything." I'll say, look, I don't know anybody who has helped more people than him, so I'm not
Right.
even going to talk bad about him, even if I
Yeah.
don't agree. Okay, so you start reading all of these finance books. Were you making any decisions that you would now consider financial mistakes? You know, after you turn 18, you start making money. Like, can we go through some of those things you would consider like, man, you might look back and say, I probably shouldn't have done that. That's probably slowed me down, you know?
Right. Um, no, nothing too major, thankfully. Like I had some setbacks around investing where I just didn't really do enough research into what I was investing into. Like I had a whole phase where I was buying like very expensive mutual funds from like my bank, which was just it was the natural thing to do because I had been with this bank for a while and I saw they had investment products, so I put money in there. And these were like mutual funds that were pretty much just index funds, but they would charge you ridiculous fees like 2%. Um, didn't hurt a ton. Probably like in terms of sheer numbers, what hurt more was diving into crypto without really doing a ton of research. Still made money from crypto, but definitely not as much as I could have if I took a more sensible approach. But I think the overall, like to summarize both of those experiences, it was really just not thoroughly researching before investing.
Okay, so well, let's dive a little bit deeper into that. Let's start with the mutual funds.
Yeah.
Were how did you? Well, you said you banked with them, so the next logical step would be to start investing with them.
Right.
Do you remember what it was that inspired you to like, hey, you know what? Let me look at the expense ratios of these. And how did you come about to realize like,
Yeah.
okay, there are more effective ways to do this?
Right. So it was Ramit Sethi. In his book, he does a really good breakdown of if we look at even a percent, if one mutual fund charges you 1% higher than another one, if you extrapolate that out over the course of 30 years, you're going to be giving that fund a lot of money. And so that was what helped me. It was just seeing the math laid out. And that was when I realized, no, you can actually just go directly and buy index funds.
Gotcha. So, okay, well, let's dive in a little bit into the crypto more. So,
Right.
what made you get into it, and how was that experience? How was that roller coaster ride? And are you still like walk me through that?
Right. It was exhilarating. No other way to put it. But how I got into it was at the time I had a client that I was freelance writing for. He was really into crypto. So I just heard him bring it up casually on calls every now and again. And eventually I was just, what is this thing? Like, let me take a look at it. And so I started reading up on Bitcoin and Ethereum primarily before diving into altcoins. And I really, really got enthusiastic about it. Like I was, for a while, that was my primary investment vehicle. Like aside from my tax advantaged accounts, I was putting any extra money I had into crypto. And it was fun. It was so this was around 2017. So I rode the wave all the way up to 20K, which was a big deal. With when Bitcoin first hit 20K. Then rode it for the most part all the way back down. It was fun. It taught me a lot of lessons about investing in psychology and really really doing your research and not getting caught up in hype. So I ended up around 2019, still very much in the green. I liquidated all of my crypto holdings and went straight to index funds. It was I don't regret that experience. It was good because it taught me a lot again about psychology and investing. But I don't currently hold any crypto.
Gotcha. So, was your initial strategy going into it, was it to buy and hold, or were you trying to time it out a little bit, or
Right.
or what was your strategy going in?
My strategy was buying and holding. So I would buy Bitcoin, buy Ethereum, buy some of these other altcoins, and with the idea of just holding for the long term.
Okay, so so you said 2017, so there was kind of between at least 2017 and now,
Right.
as a whole, crypto. Okay, when I say now, I don't mean like 2022. We're gonna start like, okay, from 2017 to December of 2021.
Right.
Some people would look at a lot of the cryptos and say like, that was a pretty steep climb. That was a pretty good bull market.
Right.
So looking back, what made you jump out when you did?
Right. And this is, I think, important. Um, I stopped, like, the more research I did into crypto, the less faith I had in it as a long-term play. Interestingly enough, I saw your eyebrows perked up.
Wow. Okay,
Yeah.
so break that down. Yeah, break that down. Break that down.
So like with Bitcoin, for example, this will rub a lot of people the wrong way just because, people tend to be very opinionated about crypto. So I'll preface it by saying, you do what makes sense for you, invest the way you believe. Like with Bitcoin, for example, technologically speaking, and in terms of its utility, I stopped seeing the value in it to the point where, I cannot confidently say that in 10 years, Bitcoin will be worth more than it is today. I think if it is, it's going to be, in my opinion, more likely because of hype than actual advances and actual adoption. Because, what really kind of flipped the switch for me was when I realized Bitcoin can succeed, and a lot of these cryptocurrencies can succeed without their prices being so inflated. Um, if you look at the actual use of Bitcoin as a peer-to-peer transactional method, it's relatively low compared to people that are buying it speculatively. So these people that are buying it speculatively are pushing the price up, whereas if the price actually reflected the use, I don't think it would be even where it is now after the dump. That's a super hot take. I know a lot of people are probably going to be like, "What? You're crazy!" But
No. It's really important because like me, I don't buy crypto. Even with this whole crash, I'm thinking like I might throw a little couple dollars in there.
right,
But it's just when you said the more research I did, the less confidence
right,
I have in it. That it shocked me because I'm completely ignorant. I have no confidence in it. And
right.
you're basically saying the opposite. Like the more I learn about it, the more I don't want to invest in it. So it's like, yeah, that's why I had the little eyebrow raise because it's phenomenal and it's a different take.
Right.
So with that being said, how okay, so you start losing faith in us, I assume all of the different cryptocurrencies because you're not
Right.
seeing the intrinsic value in it.
And like technologically speaking, I think it's very feasible that it will continue to have a massive impact. But the thing I always come back to is that can happen without the prices being inflated to the point where people are making tons of money like they expect to. People can use a technology, and the company that utilizes that technology might, their stock price might increase because the technology is so efficient, but the actual technology itself doesn't necessarily have to keep exponentially becoming more expensive. In fact, it kind of doesn't make sense if you have this means of transferring data that becomes more expensive over time. That's supposed to be, that's supposed to have more and more of the world's infrastructure built on it. It's just a little weird to me. Yeah.
Yeah, logically speaking, it doesn't make sense. I don't know. It's a lot of people compare Bitcoin to gold as it's a hedge against inflation. And this is me completely ignorantly talking, but that's been one of the arguments is like it's going to be a hedge against inflation. It's going to be a store of wealth,
Right.
and I don't get it. I
And
truly don't.
the thing is, like, Bitcoin, from the time it was created, which was 2008, 2009, to present, like, it's only really existed in this bubble where interest rates have been, increasingly lowered. It's existed in this very supportive environment where people are running to speculative assets because there's just not much yield anywhere else. We've seen during the pandemic in March of 2020, Bitcoin took a sharp dive. We're seeing right now in June of 2022, Bitcoin's taking a sharp dive. It hasn't proven itself in any scenario where you would expect it to be recession proof or inflation proof. In fact, it seems to be doing the exact opposite because my theory behind that is that investors are treating it as a speculative asset, not as a store of value. It's not something that people are actually using as a hedge. It's just like a lot of stocks. It's just like to some degree real estate. It's a speculative asset that's moving along with everything else.
Gotcha. Yeah, and now that you mention it, I think if it's a hedge against inflation, with inflation being at an all-time high,
Right.
you wouldn't see the price dropping as it is.
No, I mean, inflation is worst case. Like, I think the official number is 8.6, something like that. Bitcoin's down what for the year? Let's see. I don't know.
Like 60%, I
A
think
lot
I
more
saw
than-
earlier.
Yeah, it's not a very good hedge against inflation. So
Gotcha.
it's-
So, okay, so you decide, you know what, the more information you gather from crypto, you're like, you know what, I think I'm going to step away from this table. You said you were in the green, so you made your money the time
Yeah.
you were in, and you're stepping away. So where did you decide to move that money to?
So for the most part, I was buying US index funds. So S&P 500, like, small cap, mid cap, that sort of thing. Eventually I kind of moved towards just having a robo advisor, which is, for those who don't know, a robo advisor is, you put your money into this account, a computer, who understands like a portfolio that you set for it. So you'll say, I have this risk tolerance. I want to invest in these markets. It'll find those ETFs and buy them for you and balance your portfolio. So all that really means is I have a collection of ETFs that is automatically rebalanced for me. And when I deposit new money, it figures out where to send the money based on, my ideal portfolio balance. Probably a lot for somebody completely new to the ETFs, probably a lot to take in, but essentially that's how it works.
Yeah, we haven't really covered robo advisors on the podcast. And so let's go a little bit deeper into that. So you set up your allocation. I assume you say, because, it's super easy to say, I want, let's just say 10% bonds, 90% equities.
Right.
Would you say like, I want this index fund from this company, I want this bond from this company, or is the advisor picking those? Because the first thought I think like, man, they could pick some really expensive index funds or ETFs. So how does that work, or how do you combat that if necessary?
So the one that I use, which is a company called Wealthsimple, you don't pick that granularly. You just say, this is my risk tolerance. This is how long I'm investing for. Depending on the tax advantage account you have, they'll pick ETFs that make sense for you based on those criteria. And then you can see at any point what you're actually holding, of course. So it'll tell you, this is what your portfolio is. Like, for example, I've got like VTI, I have some bond funds. I can see the full breakdown of it. And it probably the easiest way, because I know robo advisors are relatively new to a lot of investors. The easiest way to think about it is imagine you went out and you picked a bunch of ETFs and you built a portfolio. A robo advisor, essentially all it's doing for you is it's simplifying the process of, making sure that your allocations stay within the set amount that you put. So let's say you only want 20% in the US, 20% in Canada, 20% in Europe, and then the rest split up any other way. It's maintaining that balance for you. So you're not manually having to go and move assets around to maintain your portfolio balance.
Gotcha. So it should, okay. Yeah, that makes sense. It makes it quite simple. And to think about it, I don't think I've ever rebalanced my portfolio, which I probably should. I mean, I have it, automatically investing, but
Right.
As for the percentage wise, I haven't touched it. So, but I also don't like to look at it because it's hard times nowadays.
It's not a good time.
Okay, so you dump all your money into this robo advisor. So I hope you don't take this offensive, but you sound like a pretty lazy investor. Like, you're like, look, here's the money, put it in there, and I'm gonna keep working, doing me. I don't want to have to worry about it. Does that sound about right?
Very much. Yes, and the funny thing is, I'm looking for this study right now, but being lazy as an investor is actually not a bad thing. There was a study, I'm looking for the source of it. There was a study by Fidelity actually. I found the best investors are dead. These are people that, have portfolios, they've died. Nobody's touched the money since for whatever reason. Those investors outperform a lot of people, which is funny to think. So, my goal as much as possible is to have my portfolio just assume I'm not even there.
Just
Like,
your goal is to act dead, man. Get the best
yeah,
returns, right? Yeah,
exactly.
I'm familiar with exactly what you're talking about, and it makes sense because they buy and they hold
Right.
and they hold and they never come
Exactly.
back and they just hold and they're not susceptible to the emotions that come with the upturn and the downturn. That's why I don't even like looking at my portfolio most of the time.
Yeah.
So, is there anything else that you're investing in? Any different areas? Real estate, maybe investing in businesses, or is there anything that you are investing in outside of this robo advisor that you want to expand into?
So funnily enough, so real estate is an area I want to get into. Starting with like a primary residence, which I know it's debatable whether primary residence is an investment. Sometimes it's not, sometimes it is, but I do want to own property. Just I think it's a smart financial move for a variety of reasons. I also, funnily enough, over the years have invested in watches, like luxury watches are a um, surprising source of wealth for people that I think is pretty underrated. A Rolex you can buy at retail for say $10,000. If you can get your hands on it, you can turn that around, sell it on the gray market for significantly more. Depending on the model, you could be selling a $12,000 watch for $50,000. It's crazy. It's a fun game. It's sort of like collecting art. Essentially, is what it is. So it's a sort of thing where some watches you make money, some you lose money. I don't treat it as a serious investment. Like I don't put money there that I need for retirement or anything else. But it's just something that I enjoy and it makes money as well.
It's funny that you bring that up because as soon as you said watches, that's the two things that I haven't even looked into, but I know that they have a past of performing well, which is
Right.
watches and art,
Yes.
which I don't know enough about watches and art to even formulate an opinion, but obviously people are making tons of money on it.
Yeah.
And like, for example, let's just say there are some watch companies that, car companies also do this to where, let's just use Rolex for an example. If you do not own a Rolex, then Rolex will not sell you a
Yep.
watch at their stores.
Yep.
That's where a whole lot of the value comes. I think Porsche does it too. I might be wrong, but if you do not own a Porsche, then you cannot buy a Porsche from the dealership. And it sounds pretty counterproductive to me, but the system works and
Yes.
it keeps it in high demand. And I assume that's why things like luxury cars and watches appreciate over time instead of depreciate like most other things.
Exactly. And there are sort of the kinds of people that are spending a lot of money on a Rolex or a Porsche. In a recession, they're not necessarily the ones that are hurting. And so those markets continue driving, even though, a lot of people might be hurting. You can still confidently, if you buy the right piece, you can still sell it. Because those aren't really the people that are hurting in a recession.
Gotcha. Yeah, absolutely, man. If you could spend $50,000 on a watch, you're not going to be worried about where your next meal's coming from. Hopefully.
Unless you're irresponsible about it.
Exactly. So, Brandon, I want to ask you because you're in Canada. For the listeners who do not know, how, and I'm in the United States, and so in the United States, financial literacy rates are extremely low. Let's just be blunt about it.
Right.
And it reflects in the studies that are done with living paycheck to paycheck and things like that. What has been your experience in Canada? Do you, and I mean, I don't want you to seem like you're ragging on Americans, but do you think Canadians are getting a better form of financial literacy, or do you think that you guys are having similar problems as in the US?
I think the thing that separates, so to answer your question directly, I don't think it's much better in terms of the education. Like in high school and college, elementary, all the way through college, I didn't get much of a financial education in school, nor was there really the option to take those kinds of courses. Like, funnily enough, in high school, those courses that we teach you, how to manage a budget, how to do that sort of thing, were reserved for people that are not that were expected to not go to college, like the people that are, academically a level below everyone else, which is funny.
That was I like how you did. I like what you did there. That was good. Okay, I'm
Yeah,
sorry.
no worries. Really bizarre. I think those things should be for everybody. But I think that what separates Canada from the US is that the social safety nets are in place where you won't necessarily see the consequences of that as dramatically as you would in the United States. You have, like, for example, with healthcare being just a taxpayer funded thing in Canada, you're not going to encounter very many people who are struggling to afford medical bills in Canada. Whereas in the US, somebody who's financially illiterate and as a result doesn't have money to pay for healthcare, you're gonna notice that a lot.
Gotcha. Yeah, and that makes sense. I mean, yeah, that totally makes sense. So is there any other besides healthcare? Are there any other fields that you could think of that, like, not being financially educated isn't as detrimental? For example, I'm not sure how college in
Right.
Canada works. So like,
So it's a lot cheaper. Like, it's still, you still pay for it, but it's a lot cheaper. I think for a variety of reasons. It's probably a super complex uh, list of reasons, I'm sure, why college is a lot cheaper in Canada than the US. One obvious one being that universities in the US experience very high demand. Like, people are coming from all over the world to go to the Harvards and the Yales, that sort of thing. But you can, I think there is even a program, it may have been a pilot, let me just confirm, where you can get significantly reduced education costs if your income is below a certain level
gotcha.
in
So
Canada.
like grants and scholarships that you can
Exactly.
qualify for more.
Yeah, exactly.
Gotcha. So Brandon, let's talk about Rinky Do Finance, right? First of all, where did where did you even get the idea for Rinky Do Finance?
Yeah.
It's just
So there was a kid show. It was a British show, but they showed it in Canada, where the theme song was Skinnamarink Dinky Dink, Skinnamarink Doo. It's like it was called the Elephant Show. And so Rinky Doo is kind of like, it's a very accessible, non-threatening phrase. Nobody's going to be like, I can't go to a site called Rinky Doo Finance because I'm intimidated, and they're going to be talking about money over there, and I'm going to be terrified. It's makes it very accessible for a lot of people because it's playful.
Gotcha. So that's funny. I think about it like, who's going to be threatened by Rinky Doo? You know what I mean?
Right. Yeah.
So what was your intentions when you started this whole Rinky Do Finance thing? Because I see you have a bunch of different things when it comes to financial education and things like that. So what was the intention behind it? What drove you to start it?
I was really going after the demographic that didn't see themselves as being, the type of people who would go read Bloomberg or Wall Street Journal. I was trying to approach an audience that didn't see themselves as being the types of people that would consume personal finance content, just to really give them something to read and like a sympathetic voice to speak with them and chat with them about different issues, like how to budget, how to budget, particularly if you're not earning very much money, that sort of thing.
Gotcha. And so what has been your experience with doing this thing? Because I mean, I see you get tons and tons of reactions to the questions that you ask, because some of them are pretty thought-provoking. And so what has been your experience? Has it been mostly positive? Have you been seeing a lot of negative, or how has it been for you doing this for this long?
It's definitely been mostly positive. Like, a lot of people really resonate and they'll respond thoughtfully to questions, but there's always a dichotomy of you've got on the one hand, like the traditional, I'll call them finance bros, but they could be women as well, like the traditional personal finance folks who tend to, take that kind of Dave Ramsey, like hard knock approach where, you're really instilling fear in people and telling them, you're poor because it's because of you, like it's your fault, all that sort of stuff. And then on the flip side, like the more compassionate people tend to resonate with me as well, where sometimes I'll ask a question and I'll see the two sides and the replies kind of going back and forth, going at each other.
Starting fights, man. You starting fights.
Exactly. And I'm really good about just, asking the question, then like stepping back, and then people kind of discuss amongst themselves. But that's been the experience. To me, even when people have kind of nasty engagements, it's not negative to me, because ultimately I appreciate that people are sharing their thoughts. And I think one important thing is, your view of poor people, or people in a different situation than you, a lot of the times it says more about you than it really does about them. So your commentary is really revealing of your own attitudes, I think. And so that I always go with that angle when I'm seeing something that seems a little bit somebody trying to be offensive. I'm just like, at the end of the day, you're I appreciate you sharing this perspective, but you got to understand, like, it says more about you than it necessarily does about the people you're trying to attack. So.
Yeah, I think that that's really important. And I like that you said that. You can very quickly tell those who are hopeful from those who are hopeless.
Right.
And I hate to say it, but those who are hopeless, for some reason, want to spread that mindset, to
Right.
spread the negative, like, listen, don't even try. The little man will never get ahead. And
Yeah.
and it's people like that. And unfortunately, I see it as a way to dodge accountability for your own actions, because it's super duper simple to just blame someone else. I can just sit here
Right.
and say, oh, Brandon had it easier than me, so that's it. And
Yeah. And the thing too is, like, so what if I did have it easier than you? Like, why does that justify you not wanting to try for yourself? Like, even if you have to work 10 times harder than me, like, it's just a matter of, like, do you want to succeed, and will you do it regardless of what anybody else has to do? Which is like, yeah, that's the way I look at it. There are
it's like,
certainly people who have it easier, but doesn't mean that you can't, or that doesn't mean that you shouldn't want something better for yourself too.
yeah, I always use the analogy, like, we're all running, especially in this personal finance place, we are all running on a track, and my pathmate might have 10 obstacles, yours might have 12, and someone else's might have 6.
Yeah.
It doesn't mean you don't run the race. You not
Right.
running the race, you're giving up before you even get started. And if anything, if you have way more obstacles than I do, when we get to the finish line, I'm going to look at you inspired, like, wow, you went through way more than I had to.
Yeah.
And you still made it. Like, that is where inspiration lies.
And then there are a lot of people running behind you who are in the same, going through the same obstacles that you're jumping through, that are going to say, I see he's making it, like, I'm going to continue as well.
Exactly. And they see how you navigate the obstacles, and you're like, you know what? I'm going to navigate the same way he did. So not only you're inspiring, but you're also instructing. You're also
exactly.
So there's so much positive that comes out of this, and it's like, I truly don't get it. And I don't know why, but the last couple of weeks have been crazy with, like, negative feedback on my videos, where I'm just trying to spread positivity. And I'm like, what is so negative about saying, listen, you can do it, whatever it is,
right.
You can find a way. Like, I truly don't understand how there can be negativity out of giving others hope.
Right.
But it'll always find you.
Always. You can acknowledge challenges. You can, the scenario I always find myself running into is, you try to think of, like, I try to phrase things when I write and when I tweet, like, in a way that's compassionate. Like, I'm not saying everybody's going to have it easy. Everybody's like, if you're not making it, it's your fault. I try to account for those things, but you'll always encounter those situations where people are like, where you say something positive and people finally, one instance where that might not be true. And then, suddenly it's like, you ignored a whole segment of people. But It's really just, can't account for every single scenario and everything you say.
Yeah. So let's talk a little bit because I don't like talking about the negative just as much as you don't.
Right.
Let's talk about the positive though, because
Yeah.
I'm also starting to see the fruits of my labor, at least from starting this podcast to now, where I get a message and people are like, you know what, man, I'm so glad I found your stuff. We sold our car that we couldn't afford her. We opened up. I had a buddy, man. I was so proud. He's like, look, I hit up one of your guests. I'm opening up a Roth IRA. I'm going to start maxing that baby out. And man, oh man, was I the joy that I felt.
Yes.
Can you talk a little bit about the joy you get when somebody reads your content, they interact with you, and you see them making tactical steps? Like, how does that make you feel?
It's the best thing in the world because, it happens. It started to happen a lot more too. I'm 2.5 years into Ranky Do Finance. And around the 1 year mark, it really started happening. Now it's happening more where I'll get DMs from people just being like, hey, I really appreciate that you even just wrote this article or that, you tweeted this and, I'm doing XYZ because of that. It's just like, seeing yourself have an impact on people is great because, you're paying it forward from, all the writers and the authors that would have done the same for you. Like now there are other people that you're actually helping. It's the best feeling in the world.
Yeah, man, I agree with you. I love it. It's kind of like now that I've made it to a certain point, because I consider myself well off. That's the term I like to use. I don't like to call myself wealthy or rich or anything. I am well off, and so to be able to turn around and put my hand out and say, listen, you guys are coming with me without completely just giving everything away, is phenomenal. So
Exactly.
Brandon, what are going forward, what is your strategy? What does your roadmap look like on, like, are you trying to retire early? Where are you going?
I'm trying to retire relatively early. Like 50 is the kind of benchmark I've set where I want at that point to be either retired or work optional. Of course, if I can make that happen sooner, it'll be great. But really the primary goal I'm working towards is the ability to work not because I need money, but doing work and working on projects that I really enjoy and that make me happy. Which, funnily enough, if you look at people that are really successful, it's they tend to be the people that are working on those sorts of projects. So it's like you find a way to make money doing things that you're passionate about, you will probably make more money. But that's not the ultimate goal. It's just kind of a happy byproduct of that.
Isn't that funny though? Like it's so funny you say that because literally it's so true. When you free up time to do the things you want to do, somehow, some way, it ends up getting monetized to where you can finally make money, even if it's substantially less than you were making at like a normal job. It's just somehow, some way, money starts to find you because it sees that not only are you happy, but you're also good at what you're doing. It's like,
and then
it's so weird.
Yeah, and then you're also dedicated to becoming really good at it. Like for me, that experience has rung true with a career change I made about a year ago, where my whole life I'd been a really strong writer. I enjoy writing. It's fun, but I really, really discovered a passion a few years back for software development. And it was like a light switch turned on where suddenly I was really passionate about getting good at it in a way that I wasn't necessarily passionate about, constantly leveling up as a writer. So, I was willing to spend hours watching videos about software development, like learning different things. And that consequentially has helped me level up as a developer and presented lots of career opportunities, which is really good.
Well, let's talk a little bit more about that, Brandon, because I think that that's a privilege that not many people get. Not many people get to find their true passion, their true calling, or if they do, it's very hard to monetize sometimes. Like, for example, let's just use artists. Some people really enjoy making art. So how did you come about finding like, wait a minute, I really enjoy this new thing? Or yeah, how did that come about?
Yeah, funnily enough, it's a interesting story that I learned a lot from as well throughout the experience. So I had a really good job, where I was, primarily contracted to work for one particular client. It was great, paid fantastic, but my hours were ridiculous. I was working like 12-hour days. I eventually, just decided, you know what, this is a lot. I'm going to scale back a bit. Took a pay cut, worked at a different job, and I started using that time to take a course in software development, which I'd always had an interest in. I just never had the time to actually sit down and learn it. And suddenly, now that I wasn't working 12-hour days anymore, I could do that after work. And so over the course of a couple of years, found myself like really enjoying it, really getting good at it, to the point where I was like, you know what, this could be a career. Like, I'm going to start putting together a portfolio and applying to different jobs. Within a month of starting to apply for things, I found a company that was looking for someone at my experience level, and I've been working there for a year almost. It's been a blast. Yeah, that's kind of been my journey into this career path.
Gotcha. So you mentioned scaling back, taking less hours, and getting your time back.
Yeah.
How did you, because there are some gung-ho fire people where I don't care, I'm going to make the max amount of money the earliest I can and retire early and do all this. So how was it deciding like, okay, I'm gonna work less, get my time back, and start transitioning, even though I'm on this financial independence journey to retire early?
For me, it was very calculated, because I knew that if I pulled off a transition to software development, I would end up making a lot more than I was even at the time. And so I knew that, sometimes you have to step back in order to, sometimes you got to take one step back in order to take 5 steps forward. And so I knew that going in. Still wasn't certain whether it was going to actually work out, like whether I was going to feel confident enough as a developer to make the jump, but ultimately I did, and it paid off. If it didn't pay off, I always could have just gone back to working crazy hours. Would have been fine. But
yeah, I think that's so many people's reality. Like, people are terrified, especially, listeners out there, if you're good at your job, it is okay to take a risk, because you're not just going to all of a sudden be terrible at your job by taking the risk. So what Brandon just said is like, what is the absolute worst case scenario? Is he going to be homeless living under a bridge because he can't develop software? No, he just goes back to exactly what he was doing at the same level he was doing it. So it's like, you have all of the upside. You have time back. You're pursuing something else. You're gathering more skills, and you're negating all of the downside. It's not like, and I'm sure you were an awesome employee, so they wouldn't be so, oh, we don't want that guy back anyways.
Exactly.
So that's just a shout out to the listeners, that if you're thinking about doing something like Brandon, like, it's not as bad as you seem. Like, for example, I'll use my wife as an example. I told her, as soon as we close on this next rental property, she's always talking about travel nursing. Boom, you're going to go travel nurse. You're going to pull the trigger. And, she's all scared, and I get it. It's something new, but I remind her, like, what's the worst case scenario? And let's just say it doesn't work out. Let's say you go over there and they fire you the first thing. What's the worst case scenario? You just come back to your job. They love you there. They don't want to lose you. So it's like, you have all of this upside, all of this potential that you could actually enjoy, and you don't really have any downside. And it sounds like, Brandon, you were in that same exact thing. So you're able to take that calculated risk.
And when you take the leap, you'll find yourself doing things and like pushing in a way that you might not have it in a more comfortable circumstance, which I certainly found to be true. Like, I probably learned more in the past year of what I'm doing now than I did in the prior 2 years, just because I had to. I had to take the time to do it.
Yeah, and I did something similar to where I was driving over the road, and I was out all week, and I was home like 2 days, and I decided to take a leak. Like, I'm going to do a local job. I'm going to get paid less. But again, I'll have more home time so I can do things that I enjoy more, same as you, which is things like podcasts and financial content. And what is the worst thing that could happen? Honestly, I could just go back over the road. My company loved me. They didn't want me to leave. But also, I guess that comes with you need to be doing the best you can for everyone you work for and be that employee that everybody wants.
Exactly. You have to make an impression everywhere you go.
Exactly. Yeah, I kind of don't. I think we both skipped over that part. Like, you have to be a phenomenal employee. You have to do your best and give your all in order for you to have that option.
Exactly.
So, Brandon, what are some of you talked about? You've been in software development for the last year. You're still investing in your robo-advisor, and you talked about retiring before the age of 50. What are some of the short-term goals that you hope to accomplish within the next 6 months to a year?
That's a really good question. So I set a goal for myself every year to max out my tax advantage account. So in Canada, we have a retirement savings account and also a tax-free savings account. I treat both like my retirement account. So my goal for the next 6 months is to max both of those out. Every year, thankfully, it gets a little bit challenging because my income increases, and so the limit increases as well. So it's a fun challenge to max it out constantly. A year out, I think it's tough. If we said 2 years, maybe I think I have a goal of getting my first place, like my first condo or whatever it ends up being. To actually have a property.
Gotcha. And you're in Canada, so the prices are a little bit different there, especially in the big cities. I got a buddy in Canada, and he said he bought a house for like $1 million. I'm like, there's just no way, man. I'm not dealing with that, man.
And it's not. I bet it's not. No offense to your friend, I bet it's nothing special.
Oh no, 100%. I think he lives in Toronto or either Toronto or Ontario. One of the two. But he's in one of the big cities. Yeah, and it's not
Toronto. It's probably a townhouse.
Yeah,
or something like that. Yeah.
But y'all are built different up there, so I'm gonna act my wage. Okay.
Yeah.
I'm gonna act my wage. Okay. So Brandon, what do you hope to accomplish? Okay, I know that you want to retire before the age 50, but what do you hope to accomplish within the next 5 to 10 years? And what do you have any other finish lines that you hope to cross?
Really good questions. So I've identified if I can get by around 35, if I can have $500,000 invested, I've calculated it. I will be very confident in, even if I were to scale back dramatically at the age of 35 for a variety of reasons. People have kids, people do different things that don't let them invest the way they can in their 20s. I will be fine by 50. Like I'll still be on a good trajectory. So I have that $500,000 benchmark in mind. Other than that, I think that's the main one. Like career-wise, I have goals in terms of where I want to be income-wise. I really, by my mid-30s, $200,000. I really want to be at that mark for base salary, because that'll help propel me in other ways as well.
Gotcha. And so let's just clarify for the listeners that don't know, when you say reaching $500,000 by the age of 35, you said,
right?
You're talking about coast fire, meaning let's just say the world fell apart and you just couldn't invest a single dollar into your account. That money would compound enough to, by the time you're 50, you will have enough to retire. Is that what you're talking about?
Exactly. And the way I've mapped it out is by 50, I would be able to comfortably retire. If I decided to push and retire at like a more traditional age of 60 or 65, I'd be in a fantastic position.
Gotcha.
Compounding. Yeah.
Yeah, and that's why a lot of people are very, especially younger people in the financial independence space, they're very ambitious. They're like, look, if I get to 300,000 by age 25, I'm gonna have $30 million at retirement. I'm like, listen, that's ambitious, man. Especially, but I don't knock it, but it's very good. Yeah, it's a good goal to have.
You have to be open though, but I'm very much open to the possibility that your priorities will change. Like, um, I had a conversation with my boss at the time. This would have been a couple of years ago. I was kind of explaining my plan and everything, and he was like, it's great, I love it, but he was in a very similar position when he was my age at the time, and he said like, I had kids and everything changed. Like, I started a family and suddenly all my priorities were different, and you know that's just the reality of life. Like things change, so you can't be so tied to it that you are going to be devastated when things change, because it's just the way it is. As long as you feel like you're moving in a positive direction overall with your life, you'll be fine. um I'm sure there it's hard to imagine there being very many parents who say, I regret having kids because it pushed my financial timeline back. Like,
Mm.
people are generally happy that
Yeah.
they've done that.
And I think be well, specific to this conversation, I mean, let's be honest, the downside isn't very, because it's like, what's the worst that can happen? You only get to
Right.
200,000, you have kids, and now you're like, oh well, dang it, I spent all my time accumulating all this wealth, and now it's just going to compound, but I didn't hit my goal. It's like, it's
You'll be fine.
yeah. It's
You'll be
a,
fine.
I like to call it, it's a third world problem to
Yes,
have.
there are people who, at the age of which, when you come running out of the gate, as I did, and I'm sure as you did, there are people who are retiring with less money than we have right now, and so we just got to kind of level set and be like, okay, everything's fine. You're not, yes, it may not be the ideal situation that you dreamed of, but you'll be fine.
Yeah, it's funny you bring that up because a lot of times I don't know why. It's like in my head, logically, I know like me and my wife are going to be fine as long as we continue to do what we're doing. But also, sometimes I get a little bit of anxiety like, man, will this all work out? Like, what are the odds that the world ends before then? And we didn't go and buy that Tesla I really wanted.
Right.
You know, but it's something you just have to deal with it
Yeah.
and come to the realization like there are literally people retiring with less money than we do, a lower net worth, a lot more debt, a lot more liabilities and things like that.
And people still find a way to be happy. It's funny. Like, I think in the personal finance space, a lot of the time we assume like, being poor or not hitting your target is the worst possible thing that can happen. But there are a lot of people in unfortunate circumstances that find a way to be happy. Like you can do it. Obviously you want to aspire to more, but don't write those people off and say that, they must be miserable.
Exactly. I love that, man. I'm so glad you brought that up because it's 100% true. So last question, Brandon, before we get into the final questions, I guess that's kind of,
Yeah.
I don't even know why I just said that. That was okay. Anyways, what is your position on debt? Because you definitely make a
Right.
whole bunch of tweets on good debt, bad debt, mortgages, things like that.
Yeah.
What is your position on debt? Do you have a lot of debt, or what is your overall position?
So I don't. I don't have a ton of debt. I have a car loan that I'm paying off. Interest rate is 1.09%. So I'm not really in a huge rush. Like, yes, it's kind of annoying to have debt hanging over you, but when I bought my vehicle, I knew I could have paid cash for it. But it just made absolutely no sense because 1.09% is basically free money. If I won the lottery tomorrow, though, I would pay it off. Just get rid of it. So yeah, that's the only debt I have. I think so. I've given it a lot of thought in the past couple of years since I bought my car. Like, I don't know if I would turn around and tell people to do the same thing. Like, I could see it going wrong in a lot of ways. If you have, a car loan or any other substantial loan, that especially if you're in a position where you can't pay it off right away if something happens. So I think it's more of like a yellow light thing to me. It's not like, yes, if you can get a low interest loan, go for it. To me, it's more look at your whole financial situation, think through all the different scenarios. If you lose your job, are you going to be fine to continue making payments on the loan? things like that. That applies doubly with mortgages. Like obviously most people, it's not an option for them to buy a house without a mortgage. Like 99% of us.
Especially in Canada, boy. Y'all ain't got no way, man.
There's no way. But I remember there's been a lot of exuberance these past few years. And so I've had conversations with people who say, I don't mind paying $1.5 million for a house because it's an asset, interest rates are low. But you never really, it seems like a lot of people didn't really think like what is going to happen when interest rates rise. Like suddenly you're going from, you have your mortgage at 1%, suddenly it changes and at renewal time and you don't have a 1% mortgage anymore. And your mortgage payment, I think actually an interesting statistic specific to Canada is that through to 2025, the Bank of Canada is projecting that there are many Canadians who will see their mortgage payments rise by 45%. And so I think with any debt, you just have to really be conscious and think through all of the scenarios, not get caught up in the hype of, it's really low interest. This asset is an investment. Let me go for it. I think you really have to think through it carefully.
Gotcha. Well, I kind of want to follow up with that because you're talking about something that I'm a little bit ignorant on. So mortgages in Canada. So in the United States, we have fixed rate mortgages that we can lock in for 30 years and the interest rate cannot change. You guys don't have that in Canada?
So you have fixed. I don't believe there are 30-year. Let me see. But so in Canada, how it would work is you would have a mortgage for a set amount of years, then you would renew at that point and your rate could change. So we have variable and fixed, but it would be fixed for that time. But when you renew it.
So by renew, is that the same as, I'm not sure if you're familiar with a refinance where someone else pays off the mortgage and you have the new loan or?
It's similar concept. Yeah. It will, you're essentially, it might be the same lender, like they're just giving you another loan and starting you off on a new loan term. But yeah, same idea. The loan
that sucks.
Rolled into, yeah.
That sucks. Oh my goodness. That now it's making sense. It's like, wait a minute. What you're referring to sounds kind of more like an adjustable rate mortgage in the United States, where let's say for the first 5 years, the rate is fixed, it cannot move.
Right.
And at that 6th year, it'll adjust to whatever the current rates are.
Right.
And it'll go up. I mean, they're not gonna go down like they're gonna go up. So.
Right.
Yeah, that's crazy, man. I don't want to buy in Canada. All right, Brandon. Yeah. $1 million homes, adjustable rate mortgages. Y'all are not looking good, man. I don't know about that one. But all right, Brandon, let's go into the final questions of the podcast. And of course, these are the same questions that I ask every single guest that comes on. Are you ready?
Let's do it.
Question number 1. Everyone has their own definition of what it means to have financial peace. What is your definition?
Mine is, never worrying about losing a job. Being able to go to work and take risks and, take chances. Not feeling like if I lose my job, I can't pay bills. To me, that's ultimate. Because, at that point, you're in a position where you could take a year off. You could, if you continue working and that money keeps compounding, you'll be able to retire relatively soon.
Gotcha. Question number 2. If there are listeners out there that want to start building wealth and they have no clue where to get started, what would you tell them?
I would tell them to read I Will Teach You to Be Rich. I think that book will just start you off at a very nice place. Book by Ramit Sethi, really good.
This video is sponsored by I Will Teach You to Be Rich. No, guys, I mean, honestly, I have no issue with it. I'm going to have I Will Teach You to Be Rich and Total Money Makeover in the show notes, guys. Highly suggest you read both of them. Total Money Makeover is actually what I give every wedding I go to. I always give them a book. And it's just because, it's crazy to think that the number one cause of divorce in the United States is finances. So if you can check that one off the list, it can't hurt much. You know what I mean?
The odds will be in your favor.
Exactly.
Yeah.
All right. Question number 3. If there's one thing you could advise everyone to avoid doing to build wealth, what would it be?
Ooh, good question. Um, don't okay. Don't get too tied up in one particular job out of loyalty. Like, you gotta look out for yourself and make sure that you're getting compensated fairly. I've heard multiple stories from people. I'll use one as an example. He was making $90,000 a year working at a company. He had worked up from about 60,000 to 90,000 over the course of a few years. He decided to shop his resume around, found a company that was willing to pay him $240,000, but he had been sitting at that $90,000 cap for quite a while. Don't do that. Make sure you're getting compensated fairly.
That is ridiculous. That, oh my God, my heart, man, my heart would, oh my God, I would feel so much anger. I'd feel,
Yeah.
I don't even know how I would feel. And I appreciate you bringing that up because I think job loyalty is something that the older generation had, and it was worth it during that time, especially when
Right.
we were relying on things like pensions and things along those lines where job loyalty actually paid off. But nowadays, when your retirement is based on it's what you contribute, what you save. There's a lot less upside for job loyalty,
Right.
unless of course you're starting something brand new, you're a startup or something. But I always suggest you should be, job searching at least minimum every 2 years or so,
Yeah.
at least seeing what's out there. And worst comes to worst, like what I do every 2 years, I might go job looking and I might get an offer letter, but I'm going to bring it back to my employer and say, hey, look, I really enjoy being here. This is the offer that I have. Can you match it? I'd really love to stay. I really love the company, and I don't want to leave, or can you get comparable? And, if they like you, if they, want you to stay, then they're more willing to do that. But don't think
Exactly.
that they're always going to have your best interest at heart, because the point of a business is to be as profitable as possible at the end of the day.
Exactly. And things can change very quickly. You might feel like your loyalty is being reciprocated, but then a new owner comes into the company and all that goodwill you had with the previous owner isn't there anymore. You really got to look out for yourself.
Yeah, great point. Great point. That's why they talk about it a bunch on the Bigger Pockets Money podcast, about how a big part of financial independence, retire early, really isn't the retire early part. It's the financial independence. And even if you love your job, if you love what you do for a living, that can change in an instant. And the difference in having the money to just leave if it no longer accommodates you and being stuck there, it's completely two different sides of the coin. So that's like, there's no downside. Even if you love your job, you don't have to retire early, but like Brandon said earlier, you have the option to retire early.
Exactly.
Brandon, if there's someone out there that does not believe they can reach financial peace due to their age, race, religion, sexual orientation, etc., what would you say to change their mind?
I would say you almost certainly can, because the definition of financial peace depends on you. Like, they might say, I can't become a millionaire, and maybe that's an accurate statement for them, but that doesn't have to be what financial peace is. You can define what it means, and you can choose something attainable for you.
Oh man, boy, you hit that. That was a curveball right there. Wow, I've never had a guest frame it like that. Like, financial peace is truly what you make of it.
Right.
So if financial peace means all of your bills are paid up, and you paid off a credit card and you have to deal with that, like, that is a form of financial peace.
I'm sure there are people out there who are having a really tough time, and to them, living paycheck to paycheck would actually be an achievement, because they're so deep in debt, they're spending more money than they earn, that hitting that point would be a form of peace to them. They should try and get a bit higher than that, but still, that's a worthwhile target for a lot of people.
Yeah, and the target's always moving. So they might get to where they're now living paycheck to paycheck, their bills are on time, and now they're like, you know what, I'm gonna go a little bit further, and it's gonna be a little bit harder, but the target is always moving.
Exactly.
I love that, man. Brandon, this has been such a great interview. I appreciate you so much for coming on, sharing your story, and sharing all the wisdom you have. Can you tell the audience where they can find out more about you?
For sure. So I'm on Twitter at Rinkydo Finance. I also have my blog, which is rinkydofinance.com.
Of course, guys, you guys are not going to have to go far. I'm going to have his Twitter, his website, and his Instagram linked in the show notes below where you guys can find him, read his blog posts, shoot him a message over on Twitter and look at all the content he's got out. He's always asking these thought-provoking questions that even sometimes I'm like, wow, that's what would I do in that situation? And it's phenomenal, man. I'm not gonna lie. I think I've stolen a couple of them from you. I'm gonna be completely honest.
It's all good, man.
But yeah, man, I really appreciate you taking the time out of your day, coming on and sharing, man. This has been such an awesome conversation, and I'm 100% sure there's going to be someone out there, even in my Canadian audience. I got a couple of them that can find some relation to your story.
You asked fantastic questions, and it's been a really engaging conversation. So
All right,
thank you.
Brandon. Yeah, we're gonna catch you later, man.
Sounds good. Cheers.
And guys, I really hope you guys enjoyed that interview with Brandon from Rinkydo Finance. I'm going to have all of his social medias linked down in the show notes below. That way you can find him, reach out to him. Man, he's such a great dude. And he dropped so much wisdom. We talked about Ramesh Sethi's book, I Will Teach You to Be Rich, Dave Ramsey's book, Total Money Makeover. These are such great resources in order to get the train rolling. Guys, I love the analogy of investing is like a train. And when it's a train, when you imagine a very heavy train, imagine how much power it takes to get that train rolling. It is extremely hard. But once you get it up to 1 mile per hour, then it takes a little bit less energy to get it to 2 miles an hour, then a little bit less to get it to 3. And all of a sudden, you have a train that is going 70 miles per hour that takes miles in order to stop it. That's what investing is. So even though it may seem hard, you're in the hardest stage if you have not begun investing yet. And as you go, as compound interest starts to take effect after 1 year, 2 years, 3 years, it is going to get so much easier and the compound growth is going to be phenomenal. So be that train, right? Be that unstoppable wrecking force coming down the tracks. But yeah, all those books are going to be down in the show notes. All of Brandon's contact information is going to be down in the show notes for you guys to check out. Of course, I do offer financial coaching, guys. And also make sure you guys are following me on all social media platforms. And that all of that can be found down in the show notes. I really hope you guys enjoyed the episode. I'm going to get up out of here, though. I'm your host, James Bowman. And always remember, you're only as secure as your ability to perform. So spend your life accumulating assets that can perform for you. Later, guys.